Hi, this is Kimberly Walker of Finance Smart, and I'm an EVP with myEcon. I want to share with you today some tips on how to get a better FICO credit score. Before I get started, be sure to subscribe to my channel and be on the lookout for more videos. I know a lot of you want to improve your credit rating, so here are a few tips to help you do just that. First of all, you've got to get your free credit reports. Those are available through annualcreditreport.com. By law, you're entitled to one free copy of each of your credit bureau reports from TransUnion, Equifax, and Experian every 12 months. But approximately 3 out of 4 adults in the country have never seen their credit report. This fact plays a major role in Americans having a poor credit score because you have to know what's in your credit file to know if it needs improvement or correction. Once you get your report, you need to check for any mistakes such as wrong or old addresses, incorrect late payments, any debts that you've paid off that are still showing a balance. At this point, you need to once you've discovered your errors, you'll need to dispute them with each of the credit bureaus and show any incorrect information. And then once they correct that, it'll boost your score. Under the Fair Credit Reporting Act, the law gives you the right to dispute mistakes, and anything that's old, unverifiable, or can't be substantiated, you do have the right to have it deleted. After you file your dispute, which I recommend sending via certified mail, the credit bureaus have 30 days to make their findings and make any corrections if unverified. Keep in mind, if the debt is unverified, you can dispute it again, but I won't go into details on that. Another great strategy to help improve your score is to use a credit monitoring service. When you monitor your credit, you're able to see on a regular basis how the steps and actions you take are positively or negatively impacting your credit score. A few other important steps to take: if you have credit card debt, pay down those credit card balances, because 30% of your FICO credit score is based on the amount of your credit card debt that is outstanding. So pay your balances down as quickly as possible. Also, make sure you're paying your bills on time, because 35% of your credit score is based solely on your payment track record. So if you do nothing else, make sure you pay your bills on time. In 6 months to a year, you'll start to see a rise in your score. Next, do not close any old credit accounts. Keeping those older, more established accounts open contributes to the length of your credit history, which makes up 15% of your credit score. So this leads me to the next step. Say no to new credit. 10% of your credit score is based on those inquiries when you've applied for new credit. So you should only apply for credit when you really and truly need it. Lastly, the remaining 10% of your credit FICO score is based on the mix of credit that's shown in your file. Typical mixes are installment loans, such as your mortgage, car loans, or student loans. Then you have revolving, such as credit cards. So you don't want to have just one type of credit in your history. You need to have a mix so that you can show that you're responsible and can handle different forms, which can actually boost your score, especially when you're paying them on time and keeping your balances low. So these are just a few strategies to help you improve your credit score. I hope you find this information useful on your credit education journey. Before you go, don't forget to like, comment, and share, and subscribe.